Well, you buy homeowners insurance to protect your house and car insurance to protect your car. What about insurance to protect your family's financial security? Steve Dunn from Steve and J. Dunn joins us to tell us why it's important to get life insurance. Good morning. Thanks for joining us.
Morning. Good morning, Bob.
So it might seem like a no-brainer, but let's get into the why.
Well, life insurance is one of those things that tends to be put to the back burner, so to speak. Nobody really likes to talk about death that goes with it, except we all know that there are two certainties in life, and they are death and taxes, and of course we're right in tax season, but nobody likes to talk about death, so I'd like to talk about life. I mean, people buy life insurance and consider life insurance primarily for the protection of their loved ones. And you know, one of the main reasons I believe that people buy life insurance is out of love for their family, love for their spouse, their partner, and also out of respect from a business standpoint, people that are in partnerships as far as businesses. And so it protects that family from a sudden death or loss of income that comes to that household that people just don't really think about. And the second point is that, and sometimes people forget this, is that life insurance is based solely on age and health. And so the sooner you consider it, look at it, the better off you are.
Well, that leads to my next question from the why, the when people should be considering it. At what age?
Yeah. So life insurance, of course, is better. There are two sort of sets here, and one, the younger the better. And too often, people tend to think, especially parents, say, well, they'll get life insurance for the kids when they're older. They can get their own at this time. But we all know that the children at some point are going to go up and buy a house. And of course, in the market right now, going to have to carry a massive mortgage. And so you can buy life insurance for young people. We call it the gift of insurability. And they can, you can buy $500,000 of life insurance for a 10 or 15 year old for less than a coffee a day. So that's one component. The other is people get older, they look at carrying these mortgages and comparing life insurance to mortgage insurance at the bank,
right,
owning life insurance.
Yeah,
Okay.
and so what's the advantage of going the life insurance route as opposed to your lender?
Yeah, so the main difference, Bob, is primarily the fact that when you own the coverage, you carry that with you. It's portable. So what happens when you buy it from the bank is you have a 25-year amortization. You then have 5 years of the term of the mortgage, and then they offer that coverage. And then after 5 years, you got to reapply for the mortgage insurance again. You're 5 years older. Your health may have changed. And so by buying a life insurance policy for a 20 or 30-year level term, the cost is going to be, that the premium is going to stay level for those 10 or 20 years, and it's totally portable.
But the mortgage is going down as time progresses. So how is that factored in?
Yep, no, very good point. So what happens if they have a $500,000 mortgage? When you are taken out of the bank, for example, or a financial institution, you're paying a premium on $500,000. That rate stays for those 5 years. So you might have paid down your mortgage a little, but that premium for those 5 years stays level. Then you reapply, but what happens now, you're 5 years older, so now that rate is going to be that much more expensive when you apply for a $480,000 mortgage or renew that mortgage a little lower.
Okay. I wish we had more time, but there's more answers to questions at your website, which we'll link at chh.com. Thanks for joining us this morning, Steve Dunn from Steve and J. Dunn.
Thank you very much, Bob. Happy 20 years.
Thank you very much.